All right, let's get some more detail of what's going on at an equity level, I should say, locally. Shawn Hickman joining us from, he's the research lead at Market Matters. Shawn, very good to see you. So we are expecting the local market to come off today. ASX Futures are telling us that in response to that latest data we got out of the States, which showed strength in the services sector. So how concerned should we be about that?
I think we've got to be a little bit open-minded. Good morning, by the way. Nice to be here. You know, the bond yields have fallen by quite a bit in the US over the last few weeks, as they have here. They've come back to support. I think it's not surprising. I think they're going to chop around for a while. We've had huge moves upwards in bond yields this year, as we all know. Inflation's been the dominant factor. It's put a lot of weight on the growth sector. They've started to come back a bit now. I think it's time to see how much. I think this is what the rhetoric we're finding out of the Fed, etc., is also coming to pass. Let's see how much impact these rises have had so far. We think that might actually be on the table this afternoon, and see if are we going to get a recession next year, or are actually we losing the battle with inflation and rates got to go a lot higher. So I think it's time to sit back and wait a bit. Well, so I'm not too worried at this stage.
All right, let's talk through this with some charts. And you mentioned those bond yields. We'll actually start with the US 10 there as to where that's the trend we're seeing there at the moment. They've moved higher again overnight off the back of that data. But more broadly, what are you seeing there?
I think there's time to have a rest. I'm repeating myself, you know, but if you have a look at the chart, I don't think it's up yet.
There it is.
Yep, okay, so look, they've come back to 3.5, they've come back to where they were earlier in the year. I just think it's time to have a rest. They've come back, I think about 2 or 3 months ago when I was on here, I said they've gone too far too fast. Let's wait and see. It's a boring thing to say, but we've raised rates a long way this year. And I think it's time for central banks to see the impact of that increase in rates before they decide, do we go again? So from a market point of view, sure, the market's got very, very excited over the last couple of months by the fact that these bond yields have come back. I think where you're going to go to next is, do I think that means equities go up or down from here? I think they've come a long way. You know, we were very, very bullish a few months ago when I was on the show. I think now this rally is extremely mature. We're going into Christmas. Everyone's looking for a Christmas rally. You know, 3 steps forward, 2 steps back. You know, the markets, it feels pretty rich up here. If you actually include dividends, we're basically at all-time highs. I talk to a lot of people at Market Matters, a lot of subscribers, and they're all scared of the market. But if you look at a portfolio of a quality ASX 200 stocks, they're at all-time highs if you include dividends.
We're certainly pushing towards those levels we saw at the beginning of the year, aren't we? But so are you, how is that informing your decisions at the moment then? Are you looking to take some profits?
Yes. I wish it was always profits. We might cut a few losses too.
True.
Life isn't quite that easy.
Yeah.
But I think the answer is yes. We went 100% long the market a couple of months ago. We've started taking a little bit off the table, and the plan is hopefully to do the same over the coming weeks into strength.
All right. So yeah, if we translate that to that accumulation index as we're seeing here, we can just see at what point we're at.
Yes, exactly. If you include dividends, the market's at all-time highs. And then you stand back and you say, okay, so we've had a big kick up in bond yields. The bear market in bond yields, could easily be behind us. What comes next? We could have a recession next year. Maybe we could have worse. Does it justify the market being at all-time highs? And I start to question that, so I want to have a bit of money in cash in case we've got too optimistic too fast.
Now, Shawn, we regularly talk to you about resources. That's where you have a large focus at the moment. So what are you seeing, particularly as far as the big iron ore miners, and you take into account where the iron ore price is at the moment? We might get that chart up.
Well, they've had a great kick, haven't they? They really, really have rallied strongly. I mean, Fortescue is up 50% in a matter of weeks. Okay, the iron ore price, well, it's still well under half of where it was 18 months ago. But likewise, it's rallied 40%. So it's a matter of putting things in perspective. If you said to me, Shawn, where do you think the next 20, 30% is in iron ore, which is normally a big move, but in the context of the last year or two, it's not, I'd say I'm balanced up. I mean, China is trying to reopen. It is looking to put COVID behind it, actually faster than I thought it would and faster than I thought it said last week that I thought it would happen. But if that's the way they're going to go, we should see greater demand for iron ore, which should push that price higher.
All right, so are you staying in those stocks at the moment? And we'll speak about a couple of the biggies there with, you mentioned there Fortescue, where we have the chart here. So what are you seeing and what's your positioning?
Okay, we haven't got a position in Fortescue. I wish we did from a few weeks ago, but you can't have all of them. But one thing I wanted to show on that chart was Fortescue has got ahead of the iron ore price. Now I know they've been churning out money, they've been paying great dividends, they've been doing buybacks. So it's not quite the same picture as you should from a couple of years ago, but it's not hard to see that Fortescue is starting to make the iron ore price look cheap. So normally you'd see those converge. Will iron ore come back? Will Fortescue come back? Will iron ore go up? My view is they go a bit higher. We're not looking to take profit just yet, but I think they're getting rich on the upside very quickly.
All right, and let's take a quick look at BHP and what you're seeing there.
Okay, so we've had that same chart in the Market Matters report now for the last few months. So you look at that and you'd say, oh, so Market Matters will be selling soon. We're hanging back. We are long it in both our growth portfolio and our active income portfolio. But I've got a gut feeling, which doesn't always work, but I've got a gut feeling we might even see this push to all-time highs into Christmas. But again, we are very much nearer the sell side than the buy side.
Right.
We're long, we're looking to trim the exposure.
Looking to trim. All right, that's the key. Okay, keep an eye on that chart with BHP. Hey, Shawn, that was great to talk us through what you're seeing in that space at the moment. Thanks so much for joining us in Market Matters.
Absolute pleasure.